What's going on, everyone? In this video, we are going to break down this perfect market maker buy model on the 4th of August 2025. Now, this is, as I said, a perfect example of a market maker buy model. We have the original consolidation at the top left. We have the sell side of the curve going down, creating PD arrays and also liquidity. We hit into this 1 hour PD array, which in this case is a fair value gap. As you can see, if we go onto the hourly time frame, we do not close below this level. We remain at this level. We then react off of it on the 15-minute time frame. We have an internal change in the state delivery. We have a market structure shift. And then from then on, we have an upwards pattern straight to the top. Now, we haven't quite hit the original consolidation just yet, but this liquidity is good enough for me. And as you can see, there'll be many trading opportunities going up to the top of this liquidity area anyway. So let's break it down into a bit more detail so you guys understand what to look for, and the fact that this is completely fractal will also help in your trading, and I'll explain that in a bit more detail in just a minute. So starting from the left-hand side, we have the original consolidation. Now price is deciding where it wants to go. So we just want to draw a box around this area. So as you can see, price is kind of up and down, up and down. If we go into the 1 minute, you can see it's probably even more choppy. So yeah, we're not breaking from this range or this range here. You can start it on the 1 minute, this kind of area anyway. So it's not really going anywhere. We see no sharp moves in price in either direction. So that's consolidation. Now, when we break through that range, what do we see? We see just a constant sell pattern. We see a constant downtrend. So we see a downtrend. This is the sell side of the curve. Now we are generating buy side liquidity here. So all these areas here, this is generated buy side liquidity. So these are areas which we can aim for on the buy side of the curve. So as we move down, we might retrace up, creating buy side liquidity and also creating imbalances at the same time. So on the 1 hour time frame, we have this buy side fair value gap. We have a 1 hour BC here, which as you can see, price retraces into perfectly and back down. Now, the most important thing is deciding and seeing where the smart money reversal is going to happen. Now, usually this happens on a higher time frame level. For example, a liquidity area, a PD array, or other key levels which you guys need to mark out in your charts. Now, I had this 1 hour, if I go into the 1 hour time frame, I had this 1 hour fair value gap marked from a few days ago, because if you saw my last video, you will see that marking out fair value gaps that have already been mitigated is a lot stronger than just marking out unmitigated fair value gaps. So that was already marked on my chart, and I was cautious of how price would react when it got to that level. So this is where the smart money reversal took place. So as you can see here, this is the change in the state delivery. So if I get rid of the curves so you can see it a bit more clearly. So you know that we're already in this 1 hour fair value gap, okay? So on the 15 minute then, this here is where we had the change in the state of delivery. Now the change in the state of delivery is a close above a series of down or up close candles that swept a level. So if I mark this out as liquidity, so we got our liquidity. So we swept this liquidity here. Now the series of down close candles that swept this level are these two candles here. So whenever we break above this level, whenever we close above this level, that is our change in the state delivery. So as you can see here, and if you've watched any of my other videos, you will know that I like a change in the state delivery with a fair value gap going through it. So there's already a trade there. So, and again, this is on the 15-minute time frame, so it's obviously not my ideal time frame to aim for, but even just there, we have a 1 to 3. So that is, what's that? That is, I mean, this was Friday to be fair, so we wouldn't really be able to trade this because it's over the weekend, but just for an example. So we have a change in state delivery, we have a fair value gap through, and we target the liquidity up here. So that's one trade opportunity, but as well as the change in the state delivery, we also have this market structure shift here. So we hope we close above this swing high. So that again is a market structure shift. So now after this market structure shift happened, as you can see, we just continued upwards. So the trend was up the entire day. Now, we call this the buy side of the curve. So if I just mark out the curves again, so we've got the sell side of the curve here. This is where we're generating buy side liquidity. And then on the right side, we have the buy side of the curve. So this is where we are taking buy side liquidity. So we are taking these levels and we are also generating sell side liquidity. So these levels here are sell side liquidity. So as you can see, when we take these levels, we retrace. So this level of liquidity was taken. We see a slight retracement into a fair value gap and we continue upwards again. And it's also important to bear in mind where you inverse fair value gap. So as I said, on the 1 hour time frame, we have this bearish fair value gap here. Now, to see that price has closed above that and closed through it, that now becomes an inverse fair value gap. So we can use this then to frame our buys. But other than that, I think this is just a short video on showing you guys how important it is to look for this. So when you see this kind of pattern forming, when you see a downtrend, when you see price creating buy side liquidity, engineering liquidity, which you can see here, you need to be cautious and wary of where price is going to retrace from or even reverse from. So as you can see here, if I just mark out that gap again, we have this 1 hour gap here. And this is where our smart money reversal takes place. And that is essentially the framing of this today's market maker buy model. So I hope this video has been helpful. Short and sweet video, but I think it's quite key and it's definitely a part of my trading that I look for. And for you guys, I hope you've taken something from this. Again, remember, we have to have the original consolidation. We have to identify a higher time frame point of interest, which in this case is this liquidity here. So after that, we want to wait for a time-based liquidity sweep or a smart money reversal. So as you can see here, we have a liquidity sweep. Otherwise, we wait for a session low sweep, a previous day low sweep, previous high low sweep, and then basically wait for our change in state delivery. So we want to wait for the market to tell us that we are reversing, and then yeah, we are in for buys. So yeah, as I said, hope this has been helpful. I have recently made a Telegram group, so if you click the link in the description, I put more breakdowns and information in my Telegram. If not, yeah, drop me a like, drop me a comment, drop me a subscribe, and I'll see you soon. Thank you.